This simple EMA scalping strategy can be used with the 1-minute, 5-minute, and even 1-hour charts. We backtested this strategy for over 100 trades on 2 pairs to ensure the results would be reliable. After backtesting the strategy over 100 times, we got a very high win rate. If you want to know exactly how we got these results, make sure you watch till the end. Now that we have gotten all of that out of the way, let's start. First, let's head over to TradingView. After that, change the time frame to the 1-minute, 5-minute, or 1-hour time frame. We backtested the strategy on the 1-minute time frame, so let's select the 1-minute time frame. After changing the time frame, navigate to the Indicator Search tab. Now let's first search for the EMA indicator. Select the indicator made by TradingView. Since we will be using 2 EMAs, make sure that you double-click it. Now that you have added the 2 EMAs, let's add the second indicator to the chart. Search for the stochastic indicator. Select the indicator made by TradingView and add it to the chart. This was the last indicator we will be adding to the chart. Now let's change the indicator settings. First, let's head over to the EMA indicator settings, click on the Settings button and navigate to the Inputs tab. After that, change the EMA length to 50. Now let's head over to the Style tab. Here we will be changing the EMA color to make it more visible. Now let's head over to the second EMA settings. Navigate to the Inputs tab and change the length to 150. We will also be changing the EMA color for this EMA, so head over to the Style tab and change the color. Lastly, we will be changing the stochastic indicator settings. Head over to the stochastic indicator settings and click on the Inputs tab. We will be changing all of the inputs to 5. That was all that we needed to change. Now let's take a look at how we will be using the indicators. For the strategy, we will be using the EMA indicators for the trend direction. We will also be using the EMA indicator to determine when it will be a good time to enter into a position. The stochastic indicator will be used as a confirmation indicator to make sure that the signals issued by the EMA indicators and price action are valid. We will also be using key resistance points as confirmation to make sure that the trend hasn't switched in the opposite direction. Now that you know exactly how we will be using the indicators, let's take a look at when to enter into a position. But before that, if you are looking for a secure and reliable broker that has been operating since 2007 and has raw spreads from 0 pips, extremely low fees, no hidden markups, and free deposits and withdrawals, then check out AAFX, the best broker to trade forex, indices, commodities, stocks, and cryptocurrencies. Unlike some brokers, they allow all trading strategies. Sign up via the link in the description of the video and get access to all of the previously mentioned features. Here are the rules for entering into a short position. Firstly, we will need to see that the 50 EMA is below the 150 EMA. This indicates that the market is currently in a downtrend. Secondly, we will need to see the price action pull back into the 150 EMA. You can make sure that this is the case by taking a look at the price action and seeing that it's either touching or close to the EMA. Thirdly, the stochastic indicator must become overbought. Then when the stochastic indicator is overbought, the orange line must cross above the blue line. If the cross happens really close to the overbought area, then the signal will still be valid. This cross in the overbought area indicates that the market might enter into a bearish trend. Lastly, the price must not break above the key level of resistance during the pullback. Let's draw this on the chart to make it more clear. As you can see, the price has not crossed above the previous high. Instead, the price is making lower lows and lower highs. If all of these conditions have been met, we will enter into the position. As soon as the price closes below the 50-period EMA, this will be our final entry signal. As you can see, all of the conditions have been met, so we will enter into a position. We will set the stop loss at the recent swing high. You can of course always put the stop loss slightly above the recent swing high to prevent getting stopped out if price retests the resistance point. For the take profit, we will target a 1.5 times risk to reward ratio. Now let's see how the trade plays out. As you can see, the trade was very profitable. Let me now show you when to enter into a buy position. Firstly, we will need for the 50 EMA to be above the 150 EMA. This way we will know that we are currently in an uptrend. Secondly, the price will need to pull back into the 150 EMA. If the price is a bit below or above the EMA, we will still consider it a valid signal. Now we will need to check the stochastic indicator and make sure that it's oversold. We will also need to make sure that the blue line has crossed above the orange line. The signal will be considered valid if the cross happens in the oversold area or very close to it. This indicates that the market will continue moving in the upwards direction. Lastly, during the pullback, the price is not allowed to break below the key level of support. This means that we will need to see higher highs and higher lows. By drawing arrows on the chart, we can clearly see that this is the case. For the entry signal, we will need the price to close above the 50 EMA. If all of the conditions are met, we will enter into the position on the close of the candle. We will be placing the stop loss just below the recent swing low. For the take profit, we will be targeting a 1.5 times risk to reward ratio. Now let's see how the trade plays out. As you can see, the trade was very profitable again. To make sure that you do not take false entries, let's take a look at when you should not enter into a position. As you can see here, the 50 EMA has crossed above the 150 EMA. This shows that we are currently in an uptrend. Upon looking at the price action, we also see that the price has pulled back into the 150 EMA. Now let's take a look at the stochastic indicator. As you can see, the stochastic indicator was oversold and the blue line crossed above the orange line. This means that we might start to enter into a bullish trend again. However, we won't enter into the position because during the pullback the price broke above the key level of support. Let's draw the arrows on the chart to make it more clear. As you can see, the price broke below the last key level of support. This means that the price is no longer making higher highs and higher lows. Because of this, we will not enter into the position. Now let's take a look at the backtest results. We first backtested the strategy on Euro USD. We backtested the strategy 50 times, which took us a few hours to do since we did the backtest with a regular spreadsheet. However, for the second backtest on USD JPY we used TradingView. Click the link in the description to get 7 days for free. With TradingView, we could quickly and easily backtest the strategy, and we ended up taking 60 trades, meaning that we had a total of 110 trades. On Euro USD, the strategy had a 71% win rate and a profit factor of 3.67. Even though these are great results, the strategy worked even better on USD JPY. On the USD JPY backtest, we ended up having a win rate of 75% and a profit factor of 4.5. The maximum number of consecutive wins was 14 and the maximum number of consecutive losses was 3. Overall, the strategy seems really good. However, I think we could improve the strategy even more by using a volume indicator to check if there is enough volume currently in the market to take the trade. I hope you enjoyed the video. If you did, please subscribe to the channel so that we can keep making these free videos for you. If you have any questions, leave a comment.